check this out, guys. We got a ginormous stock market move here this morning. We've got Broadcom up a whopping 17.5%. One of the bigger beneficiaries, as you will, of the AI stuff, right? AI trade, AI hype, the big winners, if you will, in that story have been things like NVIDIA. NVIDIA, by the way, up 1.3% here this morning pre-market. Broadcom up big here this morning. They had, I guess it was guidance. But anyways, people excited about Broadcom, which is pulling the NASDAQ higher here this morning. NASDAQ up 0.7%. Before the opening bell, just a testament to how bullish this market is right now. Stocks are higher here a little bit this morning, yet the S&P 500 up 0.24%. Dow Jones not seeing the same kind of love, not participating right now. The NASDAQ has been the killer right now. NASDAQ has been just on fire, does not seem to want to even take a break, just up almost every day. S&P 500 has done really well, but the Dow Jones has not been doing so well. You can see the Dow Jones of the three has been the loser in the last week or so, seeing a pretty steady sell-off, dragged lower by the big story in United Health. A lot of speculation on this company. This is a ginormous, insurance company or healthcare company. And the reason I bring that up is that, this is dragging the Dow Jones down because the Dow is what is known as a, it's not market cap weighted. It's, I can't think of the word. Basically, it looks at the actual stock price in its weighting, and UNH has a very high stock price. So it actually plays a big role in the Dow Jones and seems to be one of the dragging forces, if you will, on the Dow recently. Dow has pulled back pretty sharply. Again, like I said, multiple 1, 2, 3, 4, 5, 6. This could be the 7th day down on that Dow Jones pullback. And meanwhile, the NASDAQ is undisturbed. Technology continuing to push higher. Here's XLK, the tech ETF, powering higher here recently. And we're talking indices here this morning because they're on the move. Gold's also on the move, down 0.7%. Silver's down 1.3%. The metals are getting beat up here recently. And part of the reason for that is I think possibly the dollar strength that came in recently. You also have bonds. How are bonds doing this morning? Bonds are lower here by another 0.3%. TLT is the reference that I'm looking at. And it's because yields are climbing again. Yields climbing off of the back of the higher than anticipated producer price index numbers that we saw yesterday. Lots of movement happening on this Friday. I do have some metals trades that I'm looking at. I've got a sell put on silver, which is not looking too hot today, but wouldn't mind if silver goes lower, picking up a little bit of silver on that side. Gold looks like it had a good thing going, but fizzling out, losing its steam here as you get up into the 2700s. Gold can't seem to hang out. Gold seems to be struggling here. And again, with that higher than anticipated producer price index number that came out, it is expected that Fed rate cuts, you may get one in December here, which is very likely. But then the question is, what's next for gold? I mean, if they don't cut rates very much next year, it really hurts the story for gold. Gold looks a little less attractive. How do we know that the expectations for rate cuts are diminishing? This is a chart I told you guys to look at yesterday. Remember, 10-year Treasury yield? Keep this on your radar because, again, when this is rising, that's telling you that expectations for Fed rate cuts are diminishing. When it's dropping, rate cuts, easing monetary policy is more likely. So we'll see. UNH, again, a big story here recently in the stock market world. I talked about this. It's amazing how the actions of one individual can bring down a stock. Yeah, I mean, really sad news, regardless of how you feel about, you know, healthcare and all that stuff. I think that, when it comes to violence, that is obviously never the answer, and a sad thing, regardless of how you feel about it. I do think that, just carefully speaking on this subject, the healthcare world has been under fire here recently because a lot of people, I tell you what, a lot of people don't like insurance companies. A lot of people don't like the food and drug stuff. That's been a real big drama point on Capitol Hill, Congress, lots of arguments over there, and expectations that potentially the change of leadership could come real hard on they come down hard on the food and drug world, the insurance world, the healthcare world. I don't know what we'll see. Maybe we'll see some craziness. I think 2025 is going to be an interesting year. So we'll see. But I think UNH is also coming down because there's a little bit of and this is not my thought process, but something that I picked up from a CNBC talk show yesterday. Somebody was making the point that the Doge boys, aka Trump and Elon, love to earn the popularity contests by getting retweets. And one way that they could potentially get retweets is going after companies like UNH, which make a ton of money. And people don't like companies. People don't like insurance companies. They don't like companies they feel are predatory in any way. And so I don't know what's going to happen with that front. But UNH dragging the Dow Jones down seems to be a hefty weight recently on it. And, yesterday, take a look at the RSP. This is the equal weight S&P 500. Even though the NASDAQ and S&P are looking green right now on the market cap weighted side, what has not looked so good is the RSP, which is a measurement of how the actual average S&P 500 company is doing. It doesn't apply extra weighting to Apple, right, which has been dragging the index higher, right? Take a look at Apple, and you can see, I mean, this company has done really exceptionally well, which drags the whole index higher by itself. Whereas in the RSP, Apple is just one of 500 companies with no extra special weighting. So I think that, the RSP has been a more accurate indicator of how it is a more accurate indicator of how the average S&P 500 company is actually doing. I mean, this is a bit of a pullback, right? Not a huge one. RSP is down 3% from the highs. And, I've gone out and said, I think that the market has room to pull back. I think it's very due for a correction. You know what? This year, we have not had, you guys let's do a study. The biggest pullback this year, all year long in the S&P 500 happened right here. And at its peak, just about a 10%. Now, in terms of intraday, it kind of depends how you phrase this. Did we ever actually get a 10% pullback? Well, you could say yes on a technical basis, but this volume right here was very, very weird. It was all like pre-market stuff on that August 5th slip lower. So technically, yes. We had a 10% pullback. But on like an actual intraday trading concept, we really only got to around 9. So my point is, a 9% pullback in the S&P 500 is really a docile year, right? Because if you think about, let's go take a look at 2023, for example. Let's wind back to 2023 and let's say this was still an exceptional year. 2023 was an exceptional year, one of my best trading years ever. During this year, right, you had an incredible run up of 25% in the S&P 500. We've had 2 back-to-back exceptional years. But even during this time, you had a pullback of 11%, right? So you had that one-time pullback. If you take a look at 2022, you had a very large pullback, 26, 27%. My point with showing you this is that I think that we are due for some sort of longer, more sustainable bearish period. I'm not saying that I think that that's like we're going to enter a new paradigm where we're just bearish for months and months and months, but I think the market is due for a pullback. I'm not short. I'm not, I'm not, you could hear me say I'm a little cautious on the markets, but I think it's a little bit different than saying I'm just outright bearish, because if I was outright bearish, I'd be picking up massive short positions, which I'm not. I'm just pretty cash heavy, waiting on the sidelines for larger pullbacks that I think are due for the market. In terms of top setups, let's take a look at what we are looking at here today. So current readings, we've got a bearish reading on bonds, which is really interesting. What would a bearish reading on bonds entail? Well, it would mean now this is the 10-year treasuries. Now remember, for bond newbies, bond prices and yields move inverse from one another. Bond yields, which are moving higher, would suggest that bond prices are moving lower. My favorite bond ETF is TLT. So if I'm looking at TLT, this is an idea that, again, 10-year treasuries, bearish price action, so bearish TLT. So TLT might be a trade to look out for. At the same time, we've got NASDAQ bullish readings, Nikkei bullish readings, EuroCAD, copper, Euro Aussie. Let's look at commodities here for a second. Take a look at copper while we're speaking of it. Seemingly struggling here at resistance, trying to get a move here going, but copper's not looking too impressive, especially with the Chinese stock market coming back. I had this big trade popped in my favor here. I did sell calls, which is making money, but then price coming down here, almost back to my break-even point. So if I take a look at, I thought this was interesting. There was some big Japanese yen buying that went on. So they bought the Japanese yen pretty heavily. Net change was pretty big. They decreased short contracts pretty dramatically and went long the Japanese yen, which I thought was really something interesting. They also really did some gold buying out there. Check this out. Institutional money added long contracts to gold and closed short contracts pretty aggressively. As an aggregated number, our software just lets you visualize where that's at. Gold is still very bullish. Institutional money seems to really still love their gold long positioning. So definitely worth keeping an eye on this today, because later today we'll be getting a fresh round of COT data. Comes out every Friday. So we're going to get that data here today. It'll be updated in the software. Gold's taking a break here, it seems. Came up to that 2,700 level. Once again, knocked on the door and seeing some sell pressure. Gold just cannot seem to catch a break here. Arguably, some of the sell-off here is due to the producer price index number coming in a little bit higher than expected. Inflation concerns kind of still showing some stickiness. Takes the fun out of the rate cut story a little bit, right? We've seen that in yields. Take a look at yields quickly. You can see yields are back on the rise here. That's leading to the dollar's strength. And that, of course, puts some downward pressure on gold, which, of course, really wants to see more rate cuts from the Fed in order to really get ripping and rallying. Either that or geopolitical concerns. But it seems like both of those stories right now are just not very strong. Do you have an opinion on gold? Are you looking for bullish setups? Are you bearish on gold? What do you think?
Yeah, actually, I was actually looking for a continuation of that bullish move, especially with the tensions. But along the way, I think once the dollar gets stronger because of those inflations, one way or another, that most of the time gold will suffer from that strength. So, and it seems like that it's happening. But besides that, I think this was also an obvious area where we can say the market reached a level that we can say maybe it's a resistance. Now we see that sell-off, which I think we were waiting for. Now the question is, where can we say the market will find a support, maybe this low or something like that. But the most important thing is going to be what will happen, especially on the news events that we're going to receive from now on. but most of them, they seemed to be in favor of the dollar. But if tension still continues, I think we're going to have a mixed market where gold will just end up consolidating. But yeah, I think at the end of the day, after maybe let's say next year, which is like 40 days or something like that, I think one way or another gold will end up selling as the dollar it's gonna get stronger and stronger. We see it happening now, you see.
Sure. Yeah, no, I mean, and that's the thing about gold is it was doing so exceptionally well this year. I mean, it was doing just remarkable and has really slowed down towards the end of this year. I think a lot of the crescendo effect that we had here was leading into the election. People uncertain of how that was going to go and which way it was going to go and whether or not it would be a peaceful pass of power. You know, people had those questions, and that question being answered, I think, was a big one for gold's kind of price. So I think we're now just consolidating, trading sideways. I personally wouldn't mind the idea of actually buying some gold if it were to really go lower, but not necessarily from a short-term trading perspective, more of a longer-term kind of buy and hold scenario. Not necessarily buy and hold, but buy and look for a push higher, maybe dollar cost average. But for now, right now, I see gold is just very indecisive. Can't quite get going above these levels and can't quite seemingly commit to a sell-off either. So I don't know. We'll have to see how that plays out. And last one for you today, Kenzo. Bitcoin up 1% today, back up to 101,000. It seems like it's really, it was really going with a lot of momentum here and now has gone sideways. But it seems like investor enthusiasm still being overall decently high is keeping things like Bitcoin and Ethereum. I mean, Ethereum has been actually doing pretty well. Meanwhile, Bitcoin has kind of gone sideways. Any thoughts on crypto? Any trade ideas here or looking for breakouts?
No, at the moment, I think most of the major cryptos, I think they will end up pushing even higher, especially with this team up of Trump and Musk. I think they all in favor of cryptos. So I think I will be going more on cryptos. One of the 2 or 3, then I will have to check them. But I think going next year, we will see some extra push to the upside. It seems like things are going to look good for cryptos, especially if maybe they can relax or the regulations around crypto. That will be a very good thing. Or let's say crypto likes that. So I think we will see some aggressive push later on, even if maybe it's not going to be aggressive as this. But since some of them are still very affordable, some of them obviously they will boom. But maybe the likes of Bitcoin, Ethereum, XRP, whatever, they're mostly saturated. I don't think they will just blow up very quick, but I think they will be on a bullish momentum.
Yeah, and again, it kind of rides the curtails, if you will, of the Nasdaq and the hype, just in general of the market. So, again, very curious to see how Bitcoin. I mean, if you're feeling really confident about the market right now, which I would warn is the very consensus thing. That's the crowd sentiment right now. Is markets are going to go higher and higher and higher. That's why Bitcoin's up so much. And if you do believe that is going to continue, then hey, Bitcoin may be a trade idea for you. And I don't hate that idea. I mean, the market looks so strong right now, but at some point, these things will have larger scale corrections and pullbacks. My opinion on it would be, even if I'm bullish on Bitcoin, I've got to put stops on the trade, right? I've got to know where I'm going to say, I'm wrong. Didn't work out. Maybe this is reversing. So just something to think about is, when you're in this highly risk on environment, it is very easy to get caught up in the excitement, caught up in the hype. People are out there, talking about new cryptocurrencies. I saw a cryptocurrency today that was Giga Chad, which just sounds funny. So you got crazy names coming in for everything, and feels like we're back in 2021, which does make me a little bit nervous because many of us will remember how ugly it got for the crypto world in 2022 and for unprofitable tech stocks. Remember, Cathie Wood was really popular during that time, and so just my word of caution to those out there who are feeling the FOMO, feeling the caught up in the excitement that we're seeing in the markets right now.
No, you're right, man. I think it's that time where you have to think twice, and sometimes you might feel like you're missing out because when you check most of these coins, some of them is like 50% uh, plus within a day or two, and you feel like, whoa, if I did put something here, I was going to make something. Or maybe some other people, they show some serious profit. And unfortunately, there is these different names that some of them we never heard of before. So they sometimes pump and dump. So they hype everything. You go all in, then they dump everything, then you go back to zero. But people who knows, obviously, they took whatever they want to take, and they
Yeah.
then disappear. Unfortunately,
Yeah, no, you're
so
exactly right. That's a very common thing, unfortunately, in the crypto world. Is there's so many, kind of sketchy, scammy things that occur as well. So, just a word of caution to everybody out there with the crypto stuff, as well as just in general, don't let these hype moves that are happening in the markets get you to chase things. I mean, Kenzo, I think you and I are both, generally speaking, bullish on indices, and we've been bullish on indices for quite some time. But that being said, it does not
yes.
mean that you make irresponsible decisions, buy too high, put too much leverage on. It's very easy, even in a bull market, to still mess it up by being overly risky or chasing bad price action setups because you feel like it's going to keep. You've got to really, as a trader, have that patience. I know you hear it a million times when you're watching social media, but it's so important that you take the trades you're supposed to take, not just take a trade because it looks like it's going to keep going today. It's so exciting. You know what I mean?
Yes, you're right. Unfortunately, in trading, it's like that because we mostly rely on our emotions when we take decisions. And sometimes, when it comes to stuff like this, we don't really have to rely too much on our emotions. You have to have that plan. And when you have the plan, it helps you not to just do things the way you feel like they will actually go. You have to have a plan that will help you to reach whatever that you want to reach. And just because the market is on an uptrend, it might be on uptrend for 12 months, but it doesn't really mean it's a buy. It doesn't really mean everywhere it's a buy level. So
Yeah.
along the way, it will sell. That's why they say even if we are on an uptrend, you still have to buy at the lowest level. So along the way, the market will create those trends, but those trends, they have the lowest levels that you can actually buy. It might be on the higher level, but still there is a lower level that you can point out where you can buy. And
I like that.
unfortunately, we don't wait longer. We lose patience because you already identified the structure as a bullish move or uptrend. Then just because the market doesn't reverse up to a point where you want it, you just start by buying. Then it sell offs. Once you lose everything, it bounces back again, which means you were not wrong, but you were wrong at the time you or where you placed your level, where you placed your positions. So at the end of the day, you end up being greedy because the market moved the way you wanted, but not at your own time. So if you learn to wait, that can help.
These are tough days right now, Chris. I think you're in the same boat as me, where you show up and, yeah, I heard you saying, "Give me a better price, give me a better price." I feel the same way with a lot of things right now. My
Yep.
goodness, it's like everything is priced so richly,
Yep.
and the reason I bring that up, and reason I just wanted to pop in and chat with you about it, is just because it can feel like you're going insane when this stuff is just going up every day, and it's like, well, what am I doing? Not just full porting in the Nasdaq right now. But the thing is, these are also the times where it takes a lot of discipline not to get sucked into what feels like a vacuum cleaner right now. I mean, this market, I go into CNBC, Chris, and it is just adamantly bullish. I mean, I feel like I listen to CNBC because it helps me, just get into a mode of knowing what's going on. They got a lot of people coming on interviews and stuff.
Yep.
Point is, though, I feel like I get on there, I feel like I'm getting sold to buy this market at these prices. And it's just like, I think it's really important to take a mental moment, to take a pause and just say, when you're trading at PE ratios that are similar to the ones that traded prior to major market sell-offs and corrections.
Yep.
You have to just give yourself a gut check and just say, look, I won't be the one to chase this thing. We've been in this business for a long time, Chris, you and I mean, 2021 was a more recent similar experience for many people who are listening right now. The crypto buzz was so hot. It's not to say that these things are not going to have brighter futures ahead, but you have to remember, just because a beautiful house, if everyone envisions a beautiful house, you can still overpay for that house, or you can get it at a good price when the times are better. So just wanted to point out that there's a lot of great value companies. There's a lot of companies out there. There's a lot of crypto might have a great bright future, but it also matters what you pay for it. Look how quickly today, I mean, and this may just be a quick blip, but look how quickly, this market can get scared. That's a quick move on the NASDAQ here this morning.
Oh, yeah.
So just something to think about. All morning, Chris, I issued a word of caution to everybody because it feels like euphoria, feels like 2021 again. And, we know how that ended.
Yeah, I mean, Nick, I think that it's interesting how the market is playing this week, where it's like you had the big rip on CPI and then the fade on PPI, and then today is following through with that. We're right back towards the weekly lows on the SPX. We're coming into the Fed next week, and it's going to be, this is perfect, right? It's going to be bottom of the ninth. The Fed's up to the plate. It's a full count. They get one pitch. What are they doing on December 18th? Are they going to help the market get back to all-time highs, or are they going to say something stupid that the market doesn't want to hear, and down we go? And look, a 28-29% rally for the year can still be 20+%, right? But it's going to be an interesting spin when the financial advisors are like, oh, the market's still up 20%, but it gave back like 5 to 10% of it real quick.
Yeah.
Well, so
I mean,
it's just sentiment how it finishes.
Look at this move in 2018. I've been doing a lot of this recently, scrolling back on the chart and just reminding myself and the listeners that markets don't go up forever. Here's a year, 2018 feels eerily familiar. That looks like the chart right now. That literally looks like, imagine that this is the August and May or summer months. Looks real similar. Yeah, and then just boom, 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 and then look how quickly we gave back so much of those gains. So again, I heard you say this the other day. I feel the same way. I am not a bear on this market. I don't see a big bearish catalyst. This was a big trade war freak out. I don't know what's going to take the market down, but what makes me a little nervous right now is just simply valuations. I just see the expectations for this market are so high. Prices are very rich in a lot of things. And that just makes me say what you said earlier. I gotta wait. Give me better prices and I might play ball, but I can't do anything with these prices for a lot of indices, sectors, stocks that I like.
Yep. I'm right there with you. And like I said, like if you heard me all yesterday, like I sounded like I was griping and I was like an old curmudgeon and I'm just angry at the market. Like, look, I'm not angry. I'm surprisingly having like income trades every single week or every couple of weeks for expirations. Like income trades doing fine. I was a little caught between like the hedge levels out to the end of the year, knowing that I'm paying for it. And I've had hedges that have paid out this year and I've had hedges that have lost this year. It's like, it's kind of a wash. It was there when I needed it. It helped in August. It helped in April. It might help towards the end of this year, maybe. Like if this market really tips over aggressively, and like I said, I mean, we go 28-29% on the year, that fades to 22. It still looks good on paper, but it might feel like crap in the last 2 weeks of trading. And that momentum carrying over. And another thing, as far as like, the tops and like encouraging everyone to buy, don't we have like, isn't Trump going to like ring the New York Stock Exchange bell like this week or next week?
He did it yesterday.
He did it yesterday, right? Okay. Yep. I was like, if that's not like another kind of sign of like this market's getting toppy, like because he is a president that's going to tweet or chat or talk about like where the stock market is. And I'm telling you, there could be this complete disassociation between real economy and stock market, right? Main Street and Wall Street. We could have a legitimate Main Street recession where inflation is getting higher, everything is more expensive. Again, it keeps getting worse. Housing prices aren't coming down. We're still unaffordable. Borrowing costs are going up. It's like that's going to be felt by Main Street for sure. Wall Street, you've got all these built-in mechanisms like, okay, the stock market's ripped and all these stocks have had all these gains. You also have this buyback program that all these stocks like to do to kind of fluff the price up. You also have mergers and acquisitions, like when things get a little gnarly, those that have a lot of money buy those that don't. You know, it's like that
Yeah.
still props the market up. And so these bull markets, especially before they officially turn, there's like these like kitchen sink efforts to kind of keep things going. But
Yeah.
yeah, I don't know what the big like volatility event would be to like scare the markets off into a big correction, but I'm just braced for it. Like I just
And
see
Chris,
so
my
many
point
stocks like
too
this.
with the thing is like, okay, we don't know what the event's going to be. And the beautiful thing about this is we don't have to be. You just have to know. I've been
Yeah.
making this analogy to 17,000 times, but think of a boat, right? If everybody's on one side of the boat, which is right now, everybody's bullish, right?
Yep.
When something comes along, if everyone's on one side of the boat, the torque of that boat can be much more violent.
Yeah.
So it's just one of those things. I don't know what the catalyst can be. I'm not a bear. I'm not saying today's going to be the day it's going to drop. Today's going to be. I'm not doing that, right?
Sure.
It's gonna have some sort of bearish catalyst. It always does, right? A bear case is always around the corner for the market. You can be one of those perma bears on Twitter and you can do all that and say, haha, I knew it was going to happen. It's inevitable. There's always a bear case that comes out of somewhere. But the point is, when sentiment is very one-sided, we've talked about this a lot on my segments. I've been talking about the put call ratio almost every day. Put call ratio is real low. You got a lot of people buying calls out there. Call premiums going crazy, but puts are cheap. And the point is, we don't know what the catalyst is going to be. We don't have to know what it's going to be. We just know that sentiment is one-sided. Be careful, because when that bear case comes along, if you don't have stops in place, if you don't have hedges, if you don't have, you mentioned earlier, hedges have been a frustrating thing this year. Well, that's totally fair, because there's been so much this year that has been out of the ordinary. I mean, we've had 2 back-to-back 25+% years in the stock market. That really does feel like, okay,
3 times ever.
Yeah, maybe it's time to be a little bit more diversified, a little bit more hedged, a little bit more careful going forward, and not let these last 2 years deceive us and make us think that this is the new norm, right? That's the stuff that's top heavy central, is when people start saying, this is the new norm. We're going to see another 20% next year. I think that, the expectations being really high it makes good sense why, when everybody gets bulled up, it is very easy to disappoint the market, right? When everybody is so bulled up, when there's a good, healthy bull bear mix, the bulls can look towards and say, hey, that's not as bad as we thought. Like, there's a little bit more room for error because people are balanced. Right now, I see everybody on one side. Doesn't make me I'm getting short right now, it's going to go down. It's just that when it goes down, I think it could be pretty rough. I think it could be pretty quick.
And as you mentioned, protection is quite cheap. Like I did I've got a 608 by 590 bear put spread on the SPY. It cost me $4 for an up target of $18. Like you can get like 3-to-1, 4-to-1 payouts. And again, like, my timing might be crap, but if I'm right, I mean, like right now it's like I'm positive like $2 to $3 on my $4 position. I'm already up like 50%. But I'm going after a big win. Like, I want that hedge to be something that helps me, offset some of the inevitable drawdown that happens if we do pull back to, the 50 or 100 moving average. I mean, this is an interesting spot to be going into next week's trading, because we're on the verge. Like, I think this is a key level. This is a key level if we're sitting right at it going into next week's trading. I would say that Monday to Tuesday, surprisingly, would be like quiet days, and it's all going to be about the Fed. But it's our last full week of trading, so there could be some really wild stuff happening. Are we doing a FOMC session on Wednesday?
Yeah, for sure. We'll definitely make a show.
If you want me to jump in, like, I'm happy. I mean, I'm watching just like everybody else, but price action is going to be, I think, pretty wild. It could be like a giant volatility nothing burger, but man, it's like it's the last major catalyst that I see between the Fed and the BOJ. BOJ is probably more Forex exposure, but man, the Fed this year, the stock market. I mean, now that we're just a little faded off these highs, I mean, it's 57 all-time highs is pretty darn good. But can we get to 58 or 59 or 60 with those last 2 drifty weeks of the holidays? Maybe. Like, the Fed could kind of set it back in motion and say everything right to reassure the markets, or Jerome Powell could be honest and be real and say that inflation is not going the right direction, and they're going to have to consider maybe pausing more in 2025, but they won't. They're going to say the same two-sided stuff they've always said, and it's up to price to kind of interpret what we're going to do. So but it's going to be interesting next week.
I mean, yeah, we'll definitely be doing a show, and you're of course always we look forward to having you on, of course. For everybody who's hanging out with us, guys, do us a big favor. Chris Pulver is a regular show host here on the A1 Trading Show. The other thing I want to mention is Chris Pulver also offers his trades inside of our Discord channel. If you'd like to get access to those, the Pulver alerts, send us a DM on our website. We'll be happy to set you up, get you some information about that, or you can go to a1trading.com/pulver-alerts. Here's the information there. Or you, again, like I said, you can speak directly to our support team, and they can get you set up with a membership. Chris, thank you for coming on. We'll maybe just call it good unless you want to keep going. I mean, you're welcome to, but
I wanted to leave. So just in the spirit of this week, I would like to leave everyone just this. I know we're going to talk about this more next week, but I do think that 2025, look, Nick, every year is never easy. Every year, right? Like, if anybody thinks that this is easy, at some point, that's the person that's never seen the other side of it.
Yes.
So, I mean, I this week was kind of my public service announcement to all the traders that had the experience of 2020 and 2021, and they killed it, and then they all disappeared in 2022 because they got killed. Like, they got smoked in 2022. It feels a lot like that same type of setup, is that we're building up for all this, like, can't do anything wrong. The markets are going to rip forever. Dude, these levels and these valuations, reality has kind of gotten loose, and I'm just playing it cautiously. I'm not bearish, like, same thing. I mean, I think it's on the same page. Like, I'm not bearish, but man, it's like there's so much more risk and faster risk to the downside if this market just doesn't have everything perfectly spoon-fed to it. Like, if this market has a little bit of a tantrum, we could see 3, 5, 10% real quick. So just be cautious. That's all.
You give me that 10% pullback, and I'm probably back in the game. So it's not that you know what I mean. It's like not that's a good evidence of, if you're really bearish, you're like 10% is just the start. It's going to go much further than that. And so, you know, we'll have to see, but playing it by ear, staying one day at a time. And
did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.